All right, allow me to welcome everybody. This is I believe, the inaugural Partner AMA that we're doing here on the Hemi Spaces, on the Hemi X, Twitter, wherever you call it. I am your host, Phil Gomes. I lead communications and marketing here at Hemi, and I am joined here today by two of my companions here. One is our co-founder and chief architect, Mr. Max Sanchez, as well as our head of growth, Taylor Click, Mr. Crypto Sooners himself. And today we are going to be talking about when worlds collide, the future of cross-chain DeFi. So, in preparation for this, of course, we've been thinking about this topic really, really hard over the past several years. But also, we've accepted questions from a goodly number of Hemigos and Hemigas. So, thank you for that. We're going to be getting to as many of those as we possibly can. But before we kick this off, allow me to start with, I'd like Sharon from LayerBank, if you could please introduce yourself.
Thank you, Phil. Hi, I'm Sharon from LayerBank. LayerBank is the universal liquidity hub and on-chain money market, redefining DeFi with cross-chain compatibility. LayerBank's vision is to be the universal liquidity hub and seamless on-chain money market designed to integrate across all networks, enabling frictionless lending, borrowing, and optimized yields. And we currently support 11 networks, and we are working closely with Layer 0 for our cross-chain lending and borrowing infrastructure, and Hemi is one of our close partners. Thank you so much for having me here today.
Our pleasure, Sharon. And Kenny, do you have the mic yet?
Yep, I'm good.
All right, Kenny, go for it.
Hey, everyone, I'm Kenny. I lead ecosystem growth here at Layer 0 Labs. Layer 0 is an omni-chain interoperability protocol. What that means is basically you can send any arbitrary packet of data from one chain to another using Layer 0. Currently, we're live on over 100 chains and have attracted, some great DeFi projects building on us, including LayerBank and some other notable ones as well, like Athena, BitGo, and EtherFi. We support 100 chains across EVM, SVM, and MoveVM, and eventually our goal is to be on every chain everywhere at some point in time. So great to be supporting projects like Hemi and LayerBank, and thanks for having me on.
Absolutely, and let me kick it off. Let me kick this mule here and get to the first question. And the first of you to jump to the buzzer, please give this a whack. Well, it occurs to me that DeFi has been around for a while, and Bitcoin a hell of a lot longer than that. But I guess I want to ask the question. Everybody has different opinions of this. I want to hear everybody's opinion here. My Hemi compatriots and our guests, why is the Bitcoin DeFi conversation vital today? Go.
I think high level, we just finally have the technology to be able to do things. With SegWit activation on Bitcoin, everything takes a while to figure out how you can actually use that in interesting ways. And I think the cross-chain stuff, we had programmability on Ethereum for since 2015, but figuring out cross-chain stuff took quite a while, and we can reuse a lot of those technologies and ideas. But I think with Bitcoin, the tech's finally caught up to the vision and what people want to do, and I think we're finally in a place where people understand the Ethereum ecosystem enough, they understand Bitcoin's limitations, and they've figured out neat and interesting ways to combine the two. Also, I think Taylor's in here and he requested to speak. I'm not seeing him on the list, but I don't know if the moderator has a request from him.
Well, I got him as a speaker.
Oh, I don't see him on... okay, never mind. It doesn't show up on my screen.
Yeah, it's actually kind of inconsistent. I show him as a speaker. Taylor, what do you got? Or maybe he's not a speaker.
He said on Slack he sent an invite, but it wasn't accepted.
We love you, Taylor. moderator. I show him as a speaker, but I guess he is a moderator. Could you give him could you give him another invite? Or no, he's requesting to be added as speaker. In any event, let's kick this to our panel. Why Bitcoin DeFi and why now? We'll start with Kenny.
Yeah, I mean, if you take a look at what's happened over the last 1 or 2 years, it's really been a Bitcoin-driven cycle. I think there's a lot of things that kind of led to that, right? Notably the ETF, and then also a lot of just like new innovations in the Bitcoin ecosystem. Things like runes, ordinals, BRC20s, those kind of all kicked off this year, right? And so because of this focus on the Bitcoin ecosystem and the fact that obviously Bitcoin's the most liquid asset in all of crypto, I think that really lends itself well for the utilization of Bitcoin in Bitcoin and other ecosystems as well. Along with that, there's also the separate aspect where through Babylon, there's now Bitcoin liquid staking tokens, and we're all aware of kind of what happened with EigenLayer and these different liquid restake tokens, or even just LSTs of ETH too, right? Like it's kind of the same principle. If you have a yield-bearing asset on or a yield-bearing derivative of an asset in crypto that's fairly large, one of the most utilized assets in DeFi, it makes sense that naturally people would want to borrow and lend against that, whether that be to take out stable coins or really just loop the yield. I think that really lends itself well to a lot of kind of innovation in Bitcoin DeFi. So for me, those are really the key reasons why Bitcoin has really seen a massive proliferation, I guess, just like across the space in the past year or so.
All right, I think we finally got Taylor on. There he is.
Yes. Can you guys hear me?
Loud and clear, sir.
Awesome. Well, sorry about that, guys. Like, it's a little tech difficulties from our side, but yeah, pleasure to be here, and thanks everyone for joining. So I think like Bitcoin and DeFi, we've seen this past year, and like especially the past few months, it's taken off and really grown. I think it's at this point it's kind of like a given, or that Bitcoin is going to be the biggest asset in DeFi, not a matter of when. I mean, not a matter of if, just more of a matter of when. And I think we've seen this growth kind of just because now people have the ability to use Bitcoin and DeFi. I mean, we've seen the growth of Babylon. We've seen the growth of more Bitcoin to EVM bridges and tunnels as we're building here at Hemi. It's now people finally have the opportunity to use their Bitcoin and DeFi and to be able to earn a yield on it. And I think naturally, markets kind of chase yield and go where the yield is. And lately, most of the yield opportunities and DeFi opportunities have been around Bitcoin. So naturally, it's just kind of grown in demand. And I think this is something that's going to continue to happen. And it's beneficial for the industry as a whole, because it's unlocking, one of the biggest assets in the world. That's been idle for so many years. It's now giving it use cases and more usability within DeFi. So it's been a very cool journey to follow along.
But given that, and let me throw this to the panel, nobody in particular, what roadblocks sit in the way, right? Obviously here at Hemi, we're addressing it by approaching Bitcoin and Ethereum as a single network, as components of a super network. But what other roadblocks are in the way? And I'm talking technical. It could be cultural. It could be governmental. It seems like everybody in our ecosystem really, really wants this. But what's standing in the way?
I think a lot of it's largely the custodianship risk. You look at, wrapped Bitcoin, and people have trusted them with, $13 billion of worth of Bitcoins so they can use it in DeFi. But I hear from a lot of people, at least, that they're concerned about custodianship risk of those types of systems. And, the community of Bitcoin's very ethos aligned with, not your keys, not your crypto, right? Maybe much more than the EVM or the Solana networks or whatnot. And I think that custodianship risk has just been a major barrier for people to feel comfortable bringing, their most prized crypto asset onto DeFi and actually running it through the chutes and ladders.
Yeah, I would echo the exact thing Max said. I would say it's like a trust component. Like for so many years, people have not wanted to touch their Bitcoin. It's an asset that people kind of just want to hold in their ledger. So I would say trust is definitely one of the most major factors. Knowing that the Bitcoin that you're using within DeFi is backed on a one-to-one basis and redeemable for the underlying Bitcoin. I would say that's probably one of the biggest hurdles. And then I would say as well as liquidity. It's just building up liquidity, that could support like institutional markets, like within DeFi. I mean, we all love DeFi, but it does have constraints, like on a liquidity aspect, to attract like some of these bigger asset managers and institutions. So I think as we continue to build out the liquidity for Bitcoin-based assets within DeFi, that could be a huge unlock. And you do that via interoperability and do that, via like cross-chain messaging, being able to share liquidity cross-chain, and kind of like all being able to work together to grow the liquidity and use cases.
Yeah, I'd like to add on to Taylor's statement. I think previously scalability was Bitcoin's biggest challenge. From a dApp perspective, it's incredibly difficult to build on Bitcoin layer 1. But I think there have been technological advancements in solutions like layer 2 networks, including Hemi, that are tackling these limitations effectively. That's why at LayerBank we're partnering with these platforms with these protocols like Hemi to focus on interoperability and improving the user experience in BTCFi. I mean, with our layer 0 integration, we're launching a universal liquidity pool to innovate DeFi interoperability across EVM, non-EVM, and BTC ecosystems, offering features like cross-chain deposits for automatic swaps and bridging, cross-chain lending enabling seamless borrowing and lending across chains, one-click leverage looping to maximize staking APIs across cross-chain markets, basically to allow users to access and leverage BTC liquidity without barriers and to offer competitive APRs, increase flexibility and higher yields. With that, I think that by addressing scalability and interoperability, BTCFi is becoming increasingly accessible. And I think projects like Layer 0, LayerBank, and Hemi are working to simplify and optimize the journey for all users.
Yeah, for me, I think it's a few things, right? I think DeFi in of itself is still like a roughly fragmented, difficult to onboard experience for new users, right? Like if I'm like a new user to crypto, I need to know how to do basic things like send gas tokens to my wallet and then be able to transact from there. On top of that, I have to know like the DeFi landscape as well, right? I need to know that I have to go to Uniswap to trade assets. I have to go to Aave to borrow lend against those assets, things of that sort. And really, like, I think that's one of the biggest difficulties. And I think projects like Layer 0 and LayerBank and Hemi are doing a lot to address that, right? For us, one of the things that we have, or one of the things embedded in our protocol kind of, is source chain gas abstraction. So oftentimes, if I'm going to a new chain or I'm exploring a new chain, but like, let's say the gas token for that destination chain just went live and it's not trading in the SEX in my local jurisdiction, right? So in most instances, that would actually be blocked from using that chain. What Layer 0 does, for example, is if I'm on ETH and I want to bridge to this new chain, it'll collect the source chain gas fee in ETH. And then to make sure that I'm not bricked on destination, it'll actually airdrop some of the destination gas token once the transaction arrives. And that is all baked into the source chain gas fee, right? So very optimized, UX enhancement. And then I think for LayerBank, they're doing a lot kind of for capital efficiency of these different large cap assets in crypto. So that's like another thing, right? Just like being able to get the best rates, or like borrow in your assets in a way that's very capital efficient. So I think these are some of the things that could be done better kind of in the space.
And one of the cool things with partnerships with teams like Layer 0 and LayerBank is Hemi can focus on being kind of the eyes and ears of Bitcoin for the Ethereum ecosystem or the entire DeFi ecosystem, and then leverage all the existing interconnectivity and all the infrastructure that's already been built for interoperability. Once you bridge that gap between Bitcoin and Ethereum, everything else is already handled by these types of partners. So it makes a nice way to create a cohesive, familiar environment for Bitcoin to be brought into the broader DeFi ecosystem.
So, I'm glad you brought that up, Max, because let me skip to one of the questions from the Amigos community. Is in a world of Hemi, Layer Zero, and LayerBank, one of our community members is asking kind of the role of each one of those platforms, right? So as these three platforms come together, like the lions in Voltron, right? Kind of, if each one of you can kind of explain the role of each in this Bitcoin DeFi future.
Yeah, for Layer Zero, I guess right now, if we take a look at well, obviously we know that like Bitcoin is not native to EVM compatible networks, right? So you need some sort of like a wrap version or like a derivative, and these days that ecosystem has become quite massive, right? There's a ton of these kind of assets, and a lot of them are pervasive across multiple chains. So kind of what we do to help that out, or like to unite what would otherwise be like a pretty fragmented experience, is the use of our OFT or omni-chain fungible token standard. What this basically enables users to do, or developers as well, is to deploy multiple native instances of their token cross chains, and then kind of link and unite those deployments via mint and burn transfers. So for example, if I have, let's say I create a new asset called like KBTC or whatever, right? And I have like 100 total tokens in supply, and I want to move 50 from Ethereum to Hemi. What happens in that process is that 50 are burned on Ethereum, and then 50 are minted natively on Hemi, right? So no sort of like asset wrapping, no sort of middle chains, very direct point-to-point communication between Ethereum and Hemi. And so really that's kind of our way to encourage, I guess, liquidity unification amongst ecosystems and amongst assets, to have a way that's very intuitive where users can go bridge assets, swap, do whatever, utilize them in DeFi. And the more assets that occur that are derivatives of Bitcoin or like different staked variations, the more kind of the more like argument that there should be like a separate instance of that token deployed on another chain. And so by connecting all those deployments, I guess that's how we're really supporting Bitcoin DeFi.
Yeah, and the way Hemi plugs into that is basically Hemi provides a way for Bitcoin to be securely tokenized as a fully backed ERC20. And so given that from a technical perspective, that basically behaves as a native ERC20 minted on the Hemi network. And so that can plug into the Layer Zero OFT standard, and then people can go and move that super secure, fully backed Hemi ERC20 version of Bitcoin throughout any of the other chains that Layer Zero supports seamlessly.
Yeah, and I think kind of like echoing that in terms of like the role that each of us play, like kind of in building out these use cases, and like Bitcoin DeFi is like on the Hemi side, I would say like our like a chain side, like cross chain lending, and having like a truly interoperable future is, I think it's like it's a super bullish thing for the entire industry. But it's like, let's say Hemi can create new yield opportunities, or create a lot of borrowing demands or lending demands, like just any one of those categories. We can then users from another ecosystem can then tap into that liquidity that we've been able to build up on Hemi and utilize it on the ecosystem where they found a certain opportunity that they want to pursue. So the idea of building out like a fully interoperable future like for Bitcoin DeFi is like it's a dream. It drives competition among chains, like whoever could create the best opportunities or be able to offer the best rates or best terms. We'll have either borrow side demand, lend side demand, and be able to attract users in that way. I mean, like in a perfect world, a user doesn't even know like the chain that they're using. It's just they're using it where this is the best opportunity, where it's the most efficient. Like, and by having full interoperable, and connected ecosystems and less fragmented liquidity, like that's possible. So I think it's it's like been a thesis of mine for a few years now, that like in the future, like you're using your MetaMask, you won't even know what network you're on. It's just going to so you're going to be able to trade on wherever you're going to get the best fill or the cheapest fill or the best rates. And in order to facilitate that, you have to have connected ecosystems, which is facilitated by Layer 0, and then the lending can happen on LayerBank, and the opportunities can be created by Hemi.
And
just adding on to that. Sorry. Just adding on to that, if you think of like LayerBank, Layer 0, and Hemi as Legos, like Hemi is doing a lot with interoperability with Ethereum and Bitcoin being at the super network. You can think of it as like the gateway of Bitcoin liquidity. Layer 0 enables cross-chain messaging for the cross-chain lending on LayerBank. And on top of Layer 0, LayerBank is creating accessibility to become the universal liquidity hub, creating interoperability between all of these EVM, non-EVM, and BTC ecosystems. So therefore, by having all three of us stacked together, Hemi users can benefit from, all of these ecosystems, accessing competitive APRs and deep liquidity pools from a universal liquidity pool.
Yeah, and just to tie all that together, imagine a user starting on Base or Optimism with USDC or USDT, being able to instantly transfer that to Hemi, buy Bitcoin that's fully backed by native Bitcoin you can audit, then being able to stick that in LayerBank, borrow some other Ethereum against it, instantly take that back to the Ethereum network, stake it into a restaking protocol. All of that cycle is facilitated by adding these three layers together. I think it's also worth mentioning some of the other partners that use Layer 0 as well, like Sushi. They can provide cross-chain swaps. You could use Sushi to transfer USDC natively into Bitcoin through Layer 0 in one transaction, then put that into LayerBank. So the more of these Lego pieces you get, the more composability and interesting things you can do with near instant cross-chain interoperability, and also starting to get towards that vision that Taylor talked about for not really even caring what network you're on, just knowing the underlying technical pieces you're interacting with and being able to execute these cross-chain synthesized strategies very easily.
So we're talking about this, and I guess I'm really struck by kind of the question: could we have even had this conversation 5 or 6 years ago? And I'm not even talking about a technical limitation. I'm talking about a cultural one, right? Where it feels like we could not have conceived of, say, ordinals, runes, BRC20, et cetera, on Bitcoin, and a lot of this was driven by the so-called Bitcoin maximalist. And something that our co-founder Jeff Garzik said the other day on the Frank Shapiro podcast, The Scoop, is that he started talking about the Bitcoin moderate and the rise of the Bitcoin moderate. That is to say, people who see Bitcoin as perhaps a bit more broadly than a way to move money around and a way to move move value around in a decentralized manner. How powerful do we think this Bitcoin moderate cohort is? Do we think that's something that's sustainable? Because certainly it must have had some influence, because that's why we're having this conversation about Bitcoin DeFi. But how sustainable is this, do we think?
I think it's just going to continue to grow. I think the 4, 5, 6 years ago, a lot of the people in the Bitcoin ecosystem, the focus was around scaling with Lightning, and like you said, just focusing on payments, remittance, settlement. It wasn't really even though there were some pieces of Bitcoin DeFi, I mean, even back in the colored coins and counterparties of the world, back in that day, there was some level of Bitcoin DeFi, but it wasn't really heavily utilized. And the Bitcoin community, by and large, generally seemed to stick to this core tenet of, this is exactly what Bitcoin is. And I think with the last 2 market cycles, there's a new wave of people who look at crypto as a complete picture and see, Ethereum's great at doing this, Bitcoin's great at doing that, Solana is great for this. And what if we can synthesize all those together in an interesting way and create mutual benefit? And I think people are a lot more open to that nowadays. just as a prediction,
This space was downloaded via spacesdown.com. Visit to download your spaces today.
I don't think something like Babylon, if they were able to launch the same, self-custodied staking system back 5 years ago, they would have got nearly not even by USD, but by, Bitcoin, number of Bitcoin tokens. I don't think they would have got nearly as much traction because it was just a different community back then.
Yeah, I mean, kind of echoing what Max said. I think, it's like without a doubt, it's going to continue to grow. Like new opportunities, for Bitcoin and DeFi are going to be created. Like more chains are going to be connected by the likes like Layer 0 and other interoperability providers. But I think it's not even a debate that like Bitcoin DeFi, BTC Fi will continue to grow. More people are looking at opportunities now to move funds on chain. The political landscape, here in the States, has shifted to be kind of more favorable for crypto. I think it's like a more risk-on type market now, where people are, kind of willing to chase yields again, kind of willing to take directional bets, and just more use cases are being built out for BTC Fi. I think it's super exciting. Like, as someone who has been like working full time in the crypto space since 2017, seeing the space evolve so quickly, and like new opportunities get created every day, every week. New institutions enter the space. It's awesome to see. It's just like great for the whole industry. And the more interconnected we can make all of the ecosystems, all of the dApps, like the better it's going to be for the whole industry. It's not like it's Hemi's going to win or this layer 2 is going to win. Like it sounds cliche, but literally everyone can win. The pie is big enough that the pie just keeps growing too. Like more people are entering the space, more people are getting interested. That it's super bullish outlook, and it's really fun to be a part of and build an ecosystem that's kind of centered around Bitcoin and interoperability.
I agree. I think Bitcoin moderates are driving a shift in the narrative around Bitcoin beyond a store of value, right? And I think this cohort is growing, especially with the shifts in regulatory frameworks and growing institutional interest. Bitcoin holders are looking for ways to generate yield without selling their assets, right? I mean, take taxation as an example. As of now, selling Bitcoin incurs capital gains tax in the US, but through DeFi lending platforms like LayerBank, investors can lend their BTC assets, earn interest, and only pay taxes on the interest earned. This opens up a more tax efficient way to generate passive income. And I think this pragmatic approach is fueling BTC Fi's development and creating opportunities for platforms like LayerBank, Hemi, and Layer 0 to deliver real value.
Yeah, I think in the last cycle too, we saw several of the centralized lending platforms implode, and so I think back then there wasn't really a robust Bitcoin lending market. There wasn't a way to borrow stables against your Bitcoin and go do something useful with them and tax optimize. And I think in this next cycle, that being on DeFi with transparent smart contracts is going to be a huge game changer versus all of the risk and market capitulation, everything that we saw last cycle with those centralized lending platforms that ended up not being everything everyone hoped for.
Yeah, I think there's like a few catalysts or headwinds that kind of indicate that this is here to stay and that Bitcoin DeFi is going to be around for a while. I think one, again, like just the advent of a lot of these new Bitcoin focused technologies in like the last year or two, things like Runes, Ordinals, BRC20s, and then also on like the chain level, we also see a similar level of innovation. There's been this concept of like a Bitcoin layer 2, which last cycle was still around, but not nearly as prevalent, right? I think this cycle, the part of the theme has been like L2s, and a lot of those are now Bitcoin centric and not necessarily ETH centric, right? And so I think because a lot of those ecosystems are driven by Bitcoin and not ETH, naturally we're going to see just more demand for Bitcoin DeFi across these chains in general. And as these chains in their ecosystems continue to kind of grow and develop, that just leads more credence to the argument that there's going to be more Bitcoin focused DeFi. People are going to want to borrow against different variations of staked Bitcoin that they have, or just any like Bitcoin derivative that they have on chain. And then last is really the institutional bit, right? Like there are institutions who probably hold like a good amount of Bitcoin, or there's more institutional bit to come. And naturally, these players in TradFi or some of these larger firms or institutions are going to want to borrow or lend against their Bitcoin as well. So for creating, I guess, a method of doing that on chain, there needs to be a way to facilitate all this capital demand and capital flight. And so, I don't think it's going away anytime soon. I think if anything, it's just going to get bigger.
Yeah, completely agreed. And actually, Kenny, kind of question for you, because I feel like you guys have a good insight into this, of like with protocols, new tokens and new chains coming to you to try to build on the Layer 0 standard. Would you say that like the interest in BTC products, like BTC L2s or BTC based assets, it's growing right now? Like, do you see more inbound demand for those type of assets? Is it like remaining constant, or like when would you say you guys experience the highest demand kind of around the BTC space?
For sure, yeah. I think demand for these Bitcoin assets is really at an all-time high, right? Like, I think if we were to look 6 months back, through EigenLayer and all these different LRTs, those were probably the most in demand assets at the time. Like during that time, we got projects like EtherFi, Kelp, and Swell to kind of build on Layer 0. If we look at a lot of what our focus is in a lot of the new kind of products and assets building on Layer 0 these days, it's like Solve, Lombard, Lorenzo, projects of that kind. So I think there's a very tangible kind of tide shift from these different like staked and restaked versions of ETH to now Bitcoin LSDs. So absolutely at an all-time high still.
That's awesome. And then kind of like for Sharon, your side, for the like demand around the BTC side, one thing I've kind of noticed about a lot of these lending platforms is we kind of look for lending platforms to bring to Hemi and just kind of just evaluate the whole market is, I would say there's kind of like a lack of borrow side demand for a lot of these like Bitcoin based markets. Like, how do you think we can increase like people borrowing against their like BTC LSTs? Like my personal take on it is I think most of these like the lending markets for BTC LSTs are, a lot of them are just like you post collateral in a BTC LST and then you could borrow another BTC LST, or you could borrow WBTC, in which case like it doesn't really make like complete sense like why someone would do that, as opposed to like borrowing stables or borrowing like a different asset. But kind of curious how you think we could increase like borrow side demand for Bitcoin based assets.
That's a great question. I think, especially since LayerBank started out as like one of the pioneers in EVM-based L2s, we acknowledge like the importance of EVM ecosystems and BTC ecosystems. But I think that the future of BTCFi and DeFi in general is a universal liquidity hub compatible with all networks that offers seamless access to the best earning opportunities without the limitations of chains. And this hasn't been released yet, but looking ahead, our cross-chain implementations with Layer 0 will enable us to integrate AI agents, providing secure and efficient tools for yield optimization that cater to a wide spectrum of investors, from like institutions to someone who doesn't understand DeFi at all, like your grandma. So I think that by creating a universal liquidity hub and like getting rid of the limitations of networks and just purely just APR and earnings, I think that will have a big impact on the lending and borrowing side of BTC assets.
Hey, speak for your own grandmas. But no, just kidding. No, actually, it's funny. It's funny you bring up grandmas, because I am transmitting from Brazil, and actually the likes of U.S. stablecoins, USDC, and all this stuff are actually quite popular with the Brazilian grandmas, as it turns out. Didn't quite see that coming, but yeah, definitely take the point though, is that it does need to be does need to be for everybody. And actually, Sharon, I'd like to go back to you to kind of redirect here because, for this to all matter to everybody, grandma and on younger, the institutions kind of need to get involved. And we've been talking about things like pro DeFi for a while, right? How do we create that interface layer? So where do you think we are in terms of getting institutions on board for all of this? Because certainly that's part of what you were getting at there.
Great question. I think we can see that there have been increasing institutional interest in BTC-Fi and the entire DeFi ecosystem. If we take a step back and place institutional adoption of BTC-Fi into the diffusion of innovation, I think institutional adoption is a significant milestone in the broader diffusion of blockchain technology. I'm from a marketing and marketing research background. Just to explain the concept of diffusion of innovation, it's a theory that measures how new technologies get adopted into stages first by innovators and early adopters and, yada, yada, then eventually by the majority. And according to this theory, there is a tipping point that will push mass adoption at exponential rates for new technologies. And I think it's hard to say that institutions alone will drive this shift. But we can acknowledge that their participation adds liquidity and legitimacy to the ecosystems that can play a key role in pushing BTC-Fi past the tipping point into mainstream acceptance. And that's why, like I mentioned before, LayerBank's product development roadmap is inclusive of institutions, but also preparing for the tipping point of mass adoptions to onboard DeFi users at all levels of expertise. But to answer your question, I think we're seeing a lot of institutional interest, and because of that interest, onboarding institutions are likely to accelerate BTC-Fi adoption, and hopefully the broader picture of mass adoption of blockchain technologies.
All right. I'm going to go to a question that's been submitted by a Hemigo, and I'm going to start with Max, but I invite our other panelists to jump in. The question is, what are some of the key challenges you've encountered in building interoperability across different blockchains, and how do you see these challenges evolving in the future?
I can definitely speak to the Bitcoin side on that one. Bitcoin, for anyone who's not kind of familiar with the technical differences between Bitcoin and EVM chains, Bitcoin's on-chain, Bitcoin does have smart contracts, quote unquote. It can execute, you can write basically some instructions that a Bitcoin script runs and validates when it is spent, but it is extremely limited. And so in order to, when you look at the whole, like the way a layer 0 works, for example, they leverage all of the features of an EVM or an SVM or whatever. You need that Turing completeness. You need to be able to compute complex things, validate cross-chain proofs, send messages and validate, and track external chain consensus. And with Bitcoin, none of that's possible. Bitcoin is this very simple, and there's some benefits to that. It's very secure. It's very, there's not going to be some weird edge case bug in Bitcoin more than likely. But that simplicity means that doing a lot of these cross-chain stuff with Bitcoin, you just don't have the raw protocol level features that you do in EVM chains, SVM, whatever, that is normally used to build these kinds of technologies. And so on the Bitcoin side, the entire industry has had to become really creative and find these interesting, strange, maybe inefficient, but functional solutions to those problems. And it's a markedly different problem than solving cross-chain interoperability between pretty much any other blockchain in the crypto ecosystem. And I think that kind of highlights the value of Hemi focusing specifically on that piece and, really solving that in a secure, bare metal, way, and then being able to plug that interoperability, that, connectivity to Bitcoin, being able to bring that to the rest of the blockchain ecosystem and then leverage all of the existing interoperability infrastructure to do everything else that it's already doing so well.
All right, let me then take this. So the Amigos actually, they've got a lot of questions, and some of them actually kind of maybe tangential or orthogonal to what we're talking about here. One of our Amigos, and maybe this is quasi-governmental. One of our amigos is asking, what do you think about the arrival of CBDCs in DeFi? And do you think the future of stablecoin is private, or will the CBDCs take over? A little bit off topic, but the amigos are a curious bunch. So who wants to take that one?
I'll give my take. I think I don't think CBDCs are going to take over. Maybe like in some countries, but I think it kind of goes against like a lot of the ethos of crypto, of being permissionless, not having a complete oversight or control of your funds. I think I think a lot of maybe trade could be done in like CBDCs, or privately issued stablecoins. But I think for general DeFi, I think Tether, USDC, any of these decentralized stablecoins or any of these new stablecoins, I think will remain the prominent choice. But I can see like international trade being done like on chain with different kinds of stablecoins that maybe aren't necessarily like available to the public. But like in terms of DeFi activity, like I think Tether and Circle will remain like the major players, and maybe we'll see some new entrants as well.
Yeah, as I look at this, I mean, for my part, I don't see anything good that can be attained by the user in terms of the CBDCs. I mean, all I see there is a future where, if you've ever seen the movie Demolition Man, where people's morality is managed to like the nth degree, right? Where I don't want to have an entity have control over my dollars because it goes, you spent a little too much on red meat last week, so we're going to have to cut you off, right? I mean, it just strikes me that it's an example of taking a technology that was meant to give us some amount of autonomy and privacy and kind of turning it on its head to make it part of the surveillance state. I don't know if anybody else wants to take this one on. I recognize it's a thorny topic, but again, our community are incredibly inquisitive folks.
Yeah, definitely thorny. I think what we already have with USDC, USDT really covers what users need to get out of having fiat assets tokenized in DeFi. I think CBDCs, they're probably going to happen and people will use them, and that's inevitable. But I don't think the extra control and oversight that comes with those is necessarily in the DeFi ecosystem's benefit. But I don't think we're going to stop it.
100%. I agree with Max. I think CBDCs represent both an opportunity and a challenge with the emerging, crypto, what's it called? Like the crypto regulations and all of these licenses. I think CBDC can also pose a opportunity for onboarding new users that are maybe a little bit hesitant towards crypto, but also CBDC is a very centralized asset, which might clash with the ethos of decentralization. How they might perform in DeFi is a question. But overall, I think CBDCs compared to stablecoins like USDT or DAI lack programmability and cross-chain operability that we need to have in DeFi.
And let me toss another one from the community. One member of the Amigos community is asking, is there going to be a connection with RWA, real-world assets, in the future? I'll just throw that one out there.
It is definitely something we've explored. RWAs are still, compared to pretty much everything else in DeFi, very much in their infancy. And I think there's still some work to be done on custodianship and verification, quote unquote proof of reserves, if you will, especially for, fungible underlying assets like, say gold. But we have talked to a couple providers. There's some cool developments in the space, so we are tracking it, and I think it's probably 2025 will be the year that we see RWAs get a lot more on-chain adoption.
I like first I wouldn't say it's like a hot take, but I did spend 2.5 years or 3 years working kind of in the RWA space, and while I do think it's like a good concept and it's something that is being explored, I think a lot of it though is kind of a solution to a problem that doesn't really exist. I do think it would be really cool to buy RWAs in DeFi, or to be LP on the S&P 500 against USDC or BTC. But the reality is with public equities, for example, you can't just tokenize public equities and just let it trade in DeFi. I mean, there's established laws around this, on knowing who's in your cap table, and who could hold shares of your company and who they could go to, and having to KYC anyone who would have ownership of your equity. I mean, there's established laws. You can't just I can't just buy $100 of S&P 500 and tokenize it and sell it as a token. It's just it's just not possible to do from a legal standpoint. Then you have commodities, Max had mentioned, tokenized gold. It's a good concept. There's Paxos Gold, there's Tether Gold, but gold, I would argue, is probably one of the most easily accessible assets in the world. You could buy CFDs of gold from your local broker. In the US, you buy ETFs. There are gold shops, and every single country you see something that says, we buy gold, we sell gold. It's is there really demand for RWAs in DeFi? I mean, I think some cool concepts could be private equities. If I can, buy shares of SpaceX, or I could buy, shares of, a company that I think is going to IPO, or that, you couldn't get on a normal public market. That would be a pretty cool opportunity. But again, there's just so many established laws and rules around this already in the US. People talk about real estate, I want to tokenize real estate, but is there really demand for that? Is the average DeFi user really want to own a portion of a commercial real estate building that could yield 6%, 7% a year or something, but then have counterparty risk that they don't even know about, not even knowing who the asset issuer is, not even knowing what's really going on with the property, with the building. I mean, there's just there's so many different hurdles to it, and I kind of question, is there really a demand for RWAs and DeFi? I think there are cool. I think it's one of those things that it's cool. I would love to buy, I said, the S&P 500 in DeFi, but how much would I really allocate to it in DeFi as opposed to buying the real thing? So it'll be interesting. I think it's takes a lot of capital to launch RWA projects and do it correctly, to get regulated, and to have proof of reserves, to have an auditor, to have everything. I think it will eventually happen, but yeah, we'll see. We'll see how successful it can really be, and if there's actually demand for it.
I think the one thing that creates demand for RWAs would be being able to use them as collateral very easily. So, right now, if you go buy, a gold certificate, you can't. It's very, very hard to find somebody who's going to be a counterparty to lend you money to go, say, get exposure to Bitcoin or something. And I think that one component of being able to basically use that liquid asset much more easily as collateral will be useful. But yeah, beyond that, I don't think, if somebody's not looking for, easy liquidity and the ability to borrow against it, DeFi and taking that custodianship risk is necessarily the best path for them, for sure.
I agree with Taylor and Max, actually. I think that the introduction of RWAs into the DeFi ecosystem can introduce yield new yield into the DeFi ecosystem. And we are working with RWA focused like L2s, like Clearpool's Ocean. And undoubtedly it increases accessibility to these real world investments, but also because it's tied to a real world investment, it's considered a security, and the regulations with the securities for each jurisdiction is very different. So it's a very it's tricky waters to navigate. We do have like NFT RWA lending prepared to launch, but we're also being extremely cautious in the way that we do it, particularly because we understand that securities is a whole new level of legal complications beyond crypto and DeFi. So I think potentially it can be a great integration and create great synergies, but also the legal climates, the regulatory climates right now is not very accepting of RWA incorporation into DeFi.
Yeah, I think RWAs are certainly an interesting area for us as well. Just as I kind of mentioned, the proliferation of these Bitcoin L2s, there's also, RWA L2s, as Sharon mentioned. And I think if you take a look at a network that actually just launched yesterday, Plume Network, I think they're pioneering a lot of kind of the RWA-backed movements in DeFi and kind of democratizing access to yield that would otherwise be just kind of reserved for, a specific investor class. And so I think if we look at it last cycle, like towards the end of the bear market, there's naturally a demand for a lot of people to kind of flock to safety in times where market volatility is very high and prices are going down. And so I think more and more it makes sense as we're seeing that, these 4-year cycles kind of play out. It makes sense for some sort of like safe RWA backed yield on chain, accessible to everyone, to kind of come out and take place. And again, I think projects like Plume and some others are really helping to provide an avenue for users to participate in that area of DeFi.
And we are at the top of the hour. So what I'm going to do is I'm going to hand this over to, sorry, I'm getting some distortion here. I'm going to hand this over to our guests, Sharon and Kenny. Anything you want to drop on our audience? Anything you want to plug? Next 4 minutes, now's your chance. So whichever one of you wants to go first, hit it.
On the Layer 0 side, we're continuing to build and continuing to make ourselves VM agnostic and the most accessible interoperability protocol for anyone to use and for any developer to build on. We have some exciting things with LayerBank that we actually just announced, so very relevant to the space today. And then in the future, just more exciting integrations, more OFTs, more chain expansions from Layer 0.
Like what Kenny said, LayerBank will be soon launching our cross-chain implementations with cross-chain deposits, lending, and our index earn vaults. But more than that, we'll continue to build towards our vision of becoming the universal liquidity hub to onboard inclusive investors such as institutions and DeFi beginners. And looking into AI agents. So just in general, we'll continue to work towards building for the community and creating additional value to the community. And I think our partnership with Layer 0 and Hemi will kind of strengthen that as well. So please stay tuned.
All right, gang. And with that, we're going to wrap up the spaces. So on behalf of Hemi, Max, Taylor, Sharon, Kenny, just wanted to say thank you for everybody who stopped by. Of course, as always, this is going to be recorded, put up on our YouTube, chopped up into the best bits for social media, et cetera, et cetera. But on behalf of our hosts and our guests, thank you to everybody, and have a great week.
Thanks, everyone.